Hello and welcome. In the previous video, we learned what Marubozu candles are. Correct? In this video, we will learn about hammer candlestick pattern. Alright? Now, before we learn about the pattern itself, you need to know that there are three major trends in any market. First is uptrend, second is downtrend, and the third one is neutral trend or what we call as sideways. Okay. Now this is how the price moves in an uptrend. The price moves up, it corrects, it moves up, corrects, it moves up, and it keeps doing so. Okay. So this is called as correction, where the price comes down. In the downtrend, the price moves down, goes up a little bit, comes down, goes up a little bit, and goes down. Okay. We call this as uptrend because when you compare the price here with the price here, the price here has increased. Okay. This is called as downtrend because when you compare the price here with the price here, the price has decreased here. Alright. Now, this is all you need to know about trends for now. Now, let us proceed and learn about the hammer candlestick pattern. Hammer looks like this. Okay, this is a hammer, this is also a hammer. This hammer has certain features. Alright, and the features should appear for us to consider this as hammer. And what are the features? Let us see. First is that this hammer must occur at the bottom of a downtrend, meaning before this hammer occurs, it should be a downtrend. Okay? Big red candlesticks must be there and the price should have come down before this candlestick appears. Okay. Now how many candlesticks? Minimum 4 to 5. If it is more than 5, then it is better. So minimum 4 to 5 red candlesticks or candlesticks where bears are in control must occur before the hammer appears. Okay. The wick must be more than 2x of the body. Okay. This is wick. You know it now. Correct? This is the body. When you compare the size of the body with the size of the wick must be more than 2 times of the body. If you look at this, you can see body is this much and the wick is very long. It is more than 2 times the length of the body. Okay. Body of the candle must be small. If you see here, this is the length of the body. This is a small body. This is okay. The body should not be from here till here. Okay. Or from here till here. It is not valid. The body must be as small as possible. Should not have upper wick. Well, this is how an ideal hammer looks like. It should not have any wicks at the top. Okay. It needs to have only lower wick. Alright. And then the green candle is more powerful than red. This is hammer. This is hammer. This is also a hammer, but the green colored hammer is more powerful than a red colored hammer. Why is that? Let us learn the psychology of the formation of candles. Okay? Now, what is happening? The price was coming down. The price was in a downtrend. Bears or sellers were in control. And one fine day, let us assume that this is a candle of a day, and one fine day, the price opened here. Price opened here. The bears or the sellers pushed the price down, 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 down till here. But at this point, the buyers were sitting and they pushed with all their strength and took the price up, 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 and up. And by the end of the day, they were able to push the price till here and close it at this level. Okay? This is how a hammer is formed. Now let us consider the case of green hammer. The price was coming down, or it was in a downtrend from a couple of days, and one fine day the price opened here. Price opened here. The sellers pushed the price down. They pushed it down, down, down till here. And at this point, buyers were there, bulls were there, and they took the price up. They pushed with all their strength and took the price up. And they were not only able to close it here, but they were able to take the price above the opening price and then close it here. Okay, try to understand. This was the opening price. The bulls were able to take the price above the opening price and close it here. Whereas in this case, this was the opening price. The price came down till here. Bulls pushed it till here, but they were not able to close the price above the opening price. They were not able to take the price above the opening price. They closed it here. But here, bulls were able to close or take the price above the opening price and close it here. And that is why green hammer is more powerful than red hammer. Okay? Now, these are the variations of hammer, meaning what you saw just now are the ideal hammers, but rarely the ideal hammers appear in the market. We generally see these variations of hammer. If you look at these, we have upper wicks. Upper wicks say that there is a selling pressure, and we do not want selling pressure here because we are looking for a reversal. Okay, we are looking for a reversal. All right. Now, here the market opened. Sellers took the price down. Buyers pushed it up. Maybe they took it till here, and then once again sellers were able to push it down and close it here. Or maybe the price opened here. The buyers were able to push the price up, but then sellers pushed it down, and once again buyers were able to push it up and close it here. Okay, we don't know the entire story behind formation of this candle. To look at it, we have to go to the smaller time frame. All right, but here too we have small upper wick, which says that there is slight selling pressure. Even though we have upper wicks here, these two are considered to be hammers. Okay, because we have small body here, small bodies, and very long wicks, very long wicks. Okay, so these are considered to be hammers. These are also considered to be hammers because the wicks are very long, more than 2 times that of the body. The body are small and we have small upper wicks. Okay, so these two are also considered to be hammers. These are also considered to be hammers. Okay, so we have small body, very long wick, which indicates buying pressure. Okay, of course this has a different doji name which we will see later, but we consider this as hammer too. Okay, next, these are not hammers. Even though they look like hammers, they are not considered to be hammers. If you look at these candlesticks, you can see they have body, they have upper wicks, but they have very small wicks at the bottom. So what is the rule that we follow? The wicks should be more than 2 times of the body, but here it is not so, and so we do not consider them as hammers. Here too we have bodies which are small, but the wicks are too short, not more than 2 times that of the body, and so we do not consider these as hammers. Here we have a large upper wick, correct? We have a very substantial upper wick here also, along with a big body. The body is big, and so we do not consider this as hammer. All right? Yes. Now, when a hammer like this or these appear, they denote that the trend will change. Okay, trend will change. Let us talk about that now. Now, this is how generally the stocks move. Okay, this is how generally the stocks move. We are interested to look for patterns at these locations. Okay, at these locations. See, when we have a trend, we generally have a major trend and a minor trend. The major trend here is uptrend, meaning the price is going up. This is the major trend. This is minor trend. The price is coming down here. The price is coming down here. This is minor trend. This is minor trend. This is minor trend. Okay. And what we want is a reversal of minor trend. And so we have to look for candlestick patterns at these locations. Okay. They mainly help us to correctly find out if the minor trend is going to change. Of course, they help us to, in a larger time frame, they help us to predict the change in major trend. But generally, we look for candlestick patterns to predict the change of minor trend. All right. Now, let us take few examples of hammer pattern. Okay. This is the name of the company and this is the chart of it. So let us apply all the rules of hammer pattern. First, what we want is a downtrend, and we have a downtrend here. So from here we have a downtrend. So we have a red candle and we have a green here, red here, red, so green here and so on. The red colored candlesticks say that the bears are in control. The green colored here, even though the bulls are in control, the price is in downtrend. So we do not consider this as anything else. Okay, this too, here a large upper wick says that the sellers are in control even though the candlestick is of green color. Okay, now at the bottom of the downtrend we have our hammer. We have our hammer. Okay, now when we look at the hammer, when we detect a hammer, we can take trade in three ways. Okay, you can take a risky trade, or you can take a little bit safer trade, or you can take a highly safe trade. Okay, now let us discuss about all three. First is about risky trade. That is, as soon as you think that a hammer will be formed, you enter the trade at the closing price of the hammer. Okay, in India, market closes at 3:30 p.m. and if at 2:20 to 25 p.m. you think that a hammer is going to happen, then you enter the trade at the close of the hammer. Okay, at the close of the hammer. Now that would be considered as a risky trade because we do not know whether the price is going to move up, or whether the trend is going to reverse, or whether it is going to continue. And that is why we say that this is a risky trade. Okay, now let us say that you enter the trade. Your stop loss would be here. What is the importance of stop loss? We will see that in a later video. But for now, let us assume that the stop loss is here. Okay, and your first target would be this level, because it is from this level price started coming down, price started moving down, and so this would be considered as the first target. Okay, because the bears are sitting here, they moved the price down, correct? So bears are sitting at this level, and so this would be the first target. Okay, now if we look at this trade, it has worked out in our favor. All right, now see, I have taken the examples where the trades have worked in our favor. Okay, in my favor, let us say. Okay, I have not taken examples of trades that has gone against my decision. All right, now we keep the stop loss just below the end of this candlestick. Okay, there would be small gap between the end of the candle and our stop loss. Why? We will see later. Okay, we will see later. What is the stop loss? It is the level at which if the price comes, we would exit the trade. Okay, let us say that this is 100 rupees. Okay, this is 100 rupees and our target is 150 rupees. Okay, 150 rupees. Our stop loss would be 90 rupees, meaning we have entered the trade at 100 rupees, but if the price comes down to 90 rupees, then we would exit the trade, meaning we would sell off our stocks. Okay, that is what the stop loss means. We are stopping the loss. Okay, now this is the risky trade. This is the risky trade. If you want to be a little bit safe, then what you can do is you can wait for a candle to close above the high of this hammer. Okay, of this hammer. So this hammer's high is here. You can wait till a candle closes above the high of this above the high of this candle. So it has happened here. Okay, this has moved above the high, but it did not close here. It did not close here. It closed here. What we want is a closing above the high. So it happened here. It happened here. And what you can do is you can enter the trade here. Okay, at the closing price of this. This would be considered safe. But the problem here is the stop loss would be more. Okay. So in the risky trade, from here to here was the stop loss. Here, from here to here would be the stop loss. Okay. The stop loss would increase here. But the chances of the trade going in your favor would be more. Okay. So if you had taken a trade here, then you would have reached your target. Okay. So this is a little safe trade. If you want to be safest, then look if there are any supports at this level previously. Okay. So this hammer has happened here, correct? It has appeared here. See if there is any support behind here. Okay. Now we have this. This is this. Okay. This area is this. All right. Now if we go back, we do have a support here. Price had come down and from here it had moved up. So we have a support here, and the hammer now has appeared at the support. So this confirms that the support is intact, and now at the close of this candle you can enter the trade. So this will increase the probability of winning. Okay. So this support is also at a round number. The numbers 200, 225, 250, 275, 300, all these are round numbers and they act as support in this case. Okay. For different stocks, different numbers act as round numbers, which we will discuss later. Do not worry about it right now. Okay. So look for a support previously and buy at or buy above the closing price of the hammer for the trade to be safest. Okay. Yes. Now the question, why do we keep the stop loss just below or after giving little bit space below the end of the candlestick? For that I have an analogy. See, when the train moves, generally the gates will be closed. And if you can think logically, people can stand here to near the train. Of course, the train is not going to come and hit because it has its own track, correct? But then they leave a slight buffer, this much, correct? They leave a slight buffer just to be safe, and people stand behind this buffer, right? In the same way, we place our stop loss few points below the end of the candlestick. Okay, below the end of the candlestick. This is to make sure that our stop loss doesn't hit due to the volatility of the stock. Okay, sometimes the price may come slightly below this candlestick and it may hit the stop loss. We do not want that to happen, and so we give a buffer and we place the stop loss. Okay. Next, one more example of RBL Bank. Price was in a downtrend. So this is downtrend. We have 1, 2, 3, 4, 5, 6 candles here, and From here the downtrend had started. At the end of the downtrend, we have a hammer. We have a hammer. Now you can enter the trade in three ways. You can enter at the closing price of this, which would be considered risky because you do not know whether the price is going to go up or down. Or you can wait for a candle to close above this. That would be considered a bit safer, but the stop loss would be more. And you can look for a support before this. If there is a support, then this would be the safest trade. So you can take trade in three ways. Okay, it is left to you. Now we place the stop loss below the candlestick, okay, leaving some gap, leaving some buffer. And our first target would be here, from where the price started to move down, okay, come down. And here or here would be our first target, and the trade has gone in our favor. Okay, once again I am telling you that I have taken the charts where the trades have gone in our favor. Okay, so target has been achieved and it has moved up too. All right, yes. Next, sale, chart of sale. So price was in a downtrend. It moved up slightly here, then it came down, and we have got a hammer. You can enter the trade in three ways. You know the three ways. So if we place our stop loss here, our first target would be here because the price started moving down from here, and the trade has gone in our favor. Okay. Next, we have Reliance. Price was in a downtrend. We place our stop loss below, and first target from where the price started moving down, and we have achieved our target. But the thing here is, this is not a hammer. This is not a hammer. All right. I have told you that the wick should be more than 2 times of the body, and the body should also be small. Now even though this looks like a hammer, and even though the trade has gone in our favor, this is not considered to be a hammer. Okay, according to our rules, according to the rules, this is not considered to be a hammer. All right, but here, as I said, the trade has gone in our favor. All right, yes. So that is it about hammer. I hope you have understood the concept of hammer. Now go ahead and look at few of the charts and see if you can find the trades where the trade has gone in favor of hammer and against the favor of hammer. All right, yes. So that's it for this video. I'll see you in the next video. Till then, take care and thank you for watching.